Welcome to Ask the Expert, an award-winning daily series from 8:30 till 9 to help small businesses. If you have any questions, ask them in the comments of the live feed. If you need any more advice, join the official Intuit's QuickBooks SMB community group on Facebook. Accountants and business experts are on hand 24/7. During the live session, we'll be running a poll, so please do engage with it and I'll reveal the results at the end. Hi, I'm Lucy Johnson. I'm a fully qualified accountant and business owner of Isle Bookkeep, a newly established bookkeeping and accounting firm based on the Isle of Wight. I have over 6 years' experience working in both practice and in industry. At Isle Bookkeep, we specialise in implementing paperless systems for our clients, with a mission to take the stress out of accounting and to help business owners feel more in control of their finances. So today we are doing accounting terminology, and this is going to be based around, today we're going to be based around limited companies. So I'm going to be covering a few points. So these are going to be the registrar of companies, company's house, dividends, shareholders and shares, ordinary and preference shares, the stock market or the stock exchange, incorporation, equity, and retained earnings. So let's get straight in. So the registrar of companies. The registrar of companies is a government official responsible for maintaining financial information, okay? It ensures that basically companies don't breach legal policies. Then we go on to Companies House. So Companies House is the UK government department that collects and stores the information regarding the limited company. So registered businesses have to provide a statement at the end of each financial year to Companies House. It's very important to distinguish here that we have both HMRC and Companies House, which are quite separate. So things that are basically statements that are published to Companies House also need to be published to HMRC. Let's go on to dividends. So dividends are after-tax profits, which are distributed between the shareholders. So most companies would normally distribute dividends at the end of a financial year. So smaller companies would. However, larger companies are more likely to do this on a quarterly basis. However, I'm sure you'll know in the real world, people distribute them as and when they please. Shares are basically a part of a company. Okay, so after you purchase shares, this will be the part where the buyer will receive a document that states the percentage of the company that they bought. Therefore, a shareholder is the owner of the shares of the limited company or the corporation, which we'll go into in a minute. You can have one share or one shareholder, sorry, or you can have many, and there's no limit. Let's go on to different types of shares. Okay, so the main ones we're going to focus on are ordinary shares and preference shares. So ordinary shares, which are also known as common shares, are shares of a limited company that entitles the owner to a share of the dividend, right? Ordinary shares usually carry the highest risk, but they offer the biggest reward. Now we're going on to preference shares, which are a type of share that's issued by a limited company, and it allows the holder to have preference to receive a dividend before an ordinary share is declared. So they have preference. The stock exchange is an organisation that sets out the legal legislations for buying and selling those shares, okay? So this is the place where you'll go and you'll see all the shares and kind of how much they're going for. This is also known as the stock market. So now we're going to go on to incorporation, which to a lot of people will probably sound like quite an American word. To become a limited company, you need to incorporate the company, okay? So incorporation is basically the date in which a business is legally established. So when did you incorporate your limited company? Then we go on to equity. So equity of a limited company basically means that the owner of the shares of a company, it basically means the owner's share of the company, right? So on the balance sheet, equity represents what the shareholder's investment is, retained earnings or losses, all of that, right? It represents the net worth of a company or the person, or the net worth for the person minus the total liabilities. But in this case, it's the net worth of the company. And finally, retained earnings. So retained earnings is the net income that's retained by a company rather than distributed to the shareholders as dividends, right? So it's the amount that we're actually keeping in the business. Retained earnings aren't spendable, okay? Right, shall we get on to answer some of your fantastic questions? Let's have a look what's coming in. Okay, so Rita on Twitter DM has asked, as a business owner, how often should I need to interact with Companies House, and what do they expect from me? Okay, so I know we touched briefly on Companies House. So basically, you're going to interact with them probably once a year when you send off your financial statements. What do they expect? Well, you're also going to need to send them a confirmation statement, which is basically just details such as your address, the shareholders, just confirming, yes, this is correct, I'm still living at this address, you know, or the business is still at that address, and things like that. So maybe twice. It does depend on different businesses, but to be honest, the majority you would do your end of year accounts, and then you would just have a confirmation statement, which is normally a little bit different to your year end. Right. James on Instagram DM. I'm a gas engineer who recently set up as a sole trader. When I price jobs, I do my hourly rate, the cost of materials plus a 25%. The cost of materials plus a 25% markup. Fantastic. Should I be focusing on the markup or the profit margin when costing up? Okay, so I noticed you said costing up. So if you want to add that on top of both your materials and your hourly rate, you should be focusing on your markup. Equally, though, you need to be focusing on your profit margin, because at the end of the day, you want to make profit. By focusing on your markup, you will be increasing your profit margin anyway. So I wouldn't worry too much. I think the 25% markup sounds good to me. As long as that is on both your hourly rate and your materials, I think, yeah, you're doing a good job there. So if you're happy with that, I definitely agree with that. Right, let's have a look at the next one. Amir on Facebook Messenger. I think I know what a profit and loss statement is. I mean, it says it in the name. Yeah, it does. But when we produce one, what should we do with it? And how do we make business decisions based on it? Okay, so your profit and loss is basically just your income and your expenditure. Okay, so it's, have we made a profit or a loss? This kind of statement, although it will show your income and your expenses, so it will show how you're doing on a day-to-day basis, it's not going to show you information about your assets and liabilities. It's not going to show you an overall of how the business is actually going. So in your case, where you're asking about business decisions, I would personally push you more in the direction of management accounts. So these will help you make business decisions based on future forecasts, basically. So a profit and loss at the end of each year is just going to be completely wiped, and you start again. You've got new income, you've got new expenses. Whereas if you have your management accounts, you're going to see, okay, next year or next month even, we expect to spend X amount, and then you can go from there, and you can kind of do that. You could potentially do something around your profit and loss with what do we expect it to look like, and make decisions based on that. But it's basically management accounts that you will need for that. So that's what I would suggest, Amir. Gus on Twitter DM. What do you think is the best way to track retained earnings? Good question. The best way would be to keep on top of things, Gus. So I would say having everything going through your accounting software, tracking everything basically. So all of your income, making sure that you're very aware of, so for instance, with your limited company, of your director's loan account, work out how much you want to be taken out or how much you need to be taking out of the business. That's really important, because then you'll be able to have a much better understanding of your retained earnings. If you aren't sure about how much you're going to be taking out of the business, it's a lot more difficult because it will affect your retained earnings. So yeah, definitely keep an eye on that. But yeah, hopefully that helps. Let's have a look. James on Facebook Messenger. Maybe I'm a bit dim, but I actually don't really understand what a limited company is and what makes it the best option in most situations. What are the other options and what are the pros and cons? Okay, there's loads of questions here, so let's get started. So you don't understand what a limited company is. So sole trader is just the person on their own. A limited company is a separate legal entity, so completely separate from yourself. So your company, right? Completely separate. Limited company, so what makes it the best option in most situations? What makes it the best option is a lot of things. One, you're completely separate. So if the business does well, great, you can take dividends. If the business doesn't do so well, you and your mortgage and everything over here is all safe. So it's good in terms of that, because it's completely separate. You also have tax efficiencies. So with yourself, after you've gone over the personal allowance, you'll be paying 20% tax. Over here in your limited company, you'll be paying your 19% corporation tax on the profits. However, as the business owner, as a shareholder, you can take dividends from this company at 7.5%. These will be increasing by 1.25% next April. But it's just a good understanding that the money that you take out for yourself is only going to be taxed currently at 7.5% on that lower threshold. You also get 2,000. There's so much to go into, James, on Facebook, but basically you're going to get that £2,000, which is basically 0% tax on your dividends. So yeah, you get that free as well. What makes it the best option in most situations? So obviously I've explained the tax efficiencies, separate legal entities, things like that. There's loads more, but for another video. What are the other options and what are the pros and cons? So there's quite a few options. You've got sole trader, you've got a partnership where you come together as two sole traders. You've got a limited company, obviously. You've got things like LLPs, which are limited liability partnerships. So it's similar to a partnership. It's kind of between a partnership and a limited company. So things like that. And that's the main ones, to be honest. And what are the pros and cons? Hopefully I've explained that. If you need any more help, James, just reach out, and I'm sure I can answer that, because I could go on all day. But I don't want to bore you. Right, let's go on to the next one. Michelle on Twitter DM. What does every business have? Sorry, I don't know why I said what. Does every business have stocks then? Is that what defines a limited company? So every limited company has shares, and it has shareholders. So say if you open up your own limited company, it's just you are one director. The director could also be the shareholder. So you are the one director and shareholder, right? You could have the whole 100% shares of your business. So that's how it works. Whereas, yeah, you're right. With a sole trader, you don't have anything like that. You're correct, Michelle. Okay, let's have a look. So Nico on Instagram DM. Let's have a look what we're saying. Is there a general rule on how much dividends you should pay yourself and shareholders? Is it split evenly between them, or is it a set amount like 5%, 10% of profits? Okay, so it's based, I'm going to take it back a step. How much dividends should you pay yourself? however much you want. If we're talking about tax efficiencies, then we would suggest that you take a small, a low-level salary, so like a director's salary, that hits your national insurance threshold. But it could be, if you want, it could be below the primary threshold. So this is the most tax efficient way because it will avoid national insurance and tax. Yeah, basically is going to avoid those and keep you below that threshold. You've got 12,570 at the moment, I believe it is, of personal allowance. So we need to stay below that threshold to not pay tax, and we stay below the threshold for national insurance as well. Then you would take a dividend on top of that. You're going to have your 2,000 completely for free, right? And then when we go above that, you're going to pay the lower amount. So your dividends are only taxed. The first one is on 7.5%. So that's nice and low. Obviously, if you go above that, it's just going to go increase. And remember, it goes up by 1.25% in April. But it's just good to know. When you say about an even split, so it completely depends on the shareholding of the business. So if you have two shareholders, you have two shareholders and you both own equal shares, then the profits that you want to give out, the dividends that you want to give out, will need to be split evenly, so 50-50, right? If it was this person owns 70%, this person owns 30%, obviously it needs to be split like that. You can't give this person dividends without this person, because they need, if you give this person some money, that's at 70%, you need to give the other one at 30. So it has to be based on the shareholding. So hopefully that makes sense and you understand that. If you need me to explain it in any more detail, please do get in contact. So Dahlia on Facebook Messenger: I don't understand why a business may need shareholders or stockholders that aren't already people involved in the business. What do they have to offer? What is the value added? Okay, so people have shareholders for a number of reasons. You get things like investors. They will put a certain amount of money into the business and they will get shares in return. So they are getting a piece of the pie, and they've invested in that business to grow and do well, and they will benefit from that. So yeah, that's the main reason you would either invest, it's part of you, it's your business, you're taking a part of it. If you have, a husband and wife in a limited company, they might both want shares, and that's kind of how they built it. So yeah, there's many different reasons like that. But yeah, hopefully that explains that. Mary on Twitter DM: can I produce a detailed VAT report on QuickBooks? How would I do this? Okay, so yes, you can, Mary. Basically, it will be like a step-by-step. What I'll do is I'll get the QuickBooks team to contact you and just basically give you click here, click there. So hopefully that will help you a little bit. Owen on Instagram DMs: how does the £2,000 dividend allowance work for limited companies? It's pretty straightforward. You can take £2,000 dividends. That's that. Completely tax-free at the moment. They have said that it is 0%. Previously, it was kind of a free allowance. Is 0% now. So basically, it could increase in the future. But at the moment, we're very lucky we still have that £2,000 completely free allowance. So you can just take 2,000 and you don't need to do anything. So yeah, if you take out 4,000, you can obviously take the 2,000 off. It works like that. It's not kind of a threshold that you hit, and then once you go over it, it's only once you go over it. It's not, Yeah. So Suzanne on Instagram DM: how can I make better use of my time in tracking down profit and loss numbers for each month? Okay, so better use of your time tracking profit and loss. So personally, I would say keep on top of everything. So keep on top of your bookkeeping, keep on top of all your accounts, everything, so that, for me, I would always say get a bookkeeper. You're saying about better use of your time, get somebody else to do it, keep on top of all your bookkeeping, whether that's yourself or whether that's your bookkeeper or whether that's both, keeping on top of it so that you have really up-to-date figures, you know your profit and loss figures off the top of your, like, or on your fingertips kind of thing, you know all those details. Yeah, and they'll really help you. How can you make tracking them down? So yeah, and it's just about keeping all your records as best you can, and then you're just going to have up-to-date figures as often as possible. I mean, for me, I try to, on a daily basis, just keep on top of things so that I look at it and I've got real-time data at my fingertips. And that way you can make more informed decisions in your business as well. Francesca on Facebook Messenger. The accounting jargon I find most difficult is actually all the qualifications and name markers. Some accountants have multiple. As a potential client, which one should I be looking out for? And what do they all mean? Oh, this is a fantastic question. I love this. Okay. There's loads of different qualifications. You've got AAT, you've got CIMA, you've got ACCA, ACA, all sorts. The main things, in my personal opinion, to look out for is whether an accountant is chartered or not chartered. Personally, I'm not chartered. I don't need to be. I don't work with anyone that I can't work with. It's just things like audit that I can't do, basically, and certain very high levels, so really massive companies. For me personally, I would say just find an accountant who is qualified. I'm qualified. You do find a lot of accountants who aren't qualified. You don't need to be qualified to be an accountant, but as with anything, you kind of get what you need. In my personal opinion, you don't need a chartered accountant, because only the very large companies do actually need chartered and would need kind of audits and things like that. But obviously they have higher up qualifications, so that's fine. You will probably obviously be charged more based on that. But yeah, I would normally go with somebody who's qualified, just because with a qualification, we hold a license, and basically every decision that we make, every accounts that we prepare, everything that we do, we are putting our license against it. So it's really, really important that we make really, really good decisions based on, you know, we really care about our license. Whereas another accountant may not mind as much, and the responsibility, a lot of the time, to be honest anyway, the responsibility goes to the person who is providing us with the information, so the business owner. But yeah, I could go into this for days, but I have also done a lot of social media content around this, so feel free to go and check out my Instagram, because I've done a lot actually around qualifications and whether your accountant is qualified or not, and what these different things mean. So yeah, go and have a look. Raheem on Twitter DM, how do you find potential shareholders? So this is more like, if you're looking for shareholders for like investments, I would personally speak to an investment specialist. Obviously, I don't specialise in that, but there's multiple ways you can find them. But yeah, I'm going to leave that to the professionals on that part. But you can always find opportunities for people to become shareholders. And also it's a case of, basically there's different limited companies. So you've got Limited Ltd, which is a private limited company. So that's just, you know, Joe and Bob down the road opening up their limited company. Whereas you also have what you've probably seen like Tesco and the big companies, PLCs, which are limited companies, believe it or not, but they're public limited companies. And this means that they're on the stock exchange. And that's the part that I was explaining earlier. So this means that they're open to the public, and you can get your shareholders involved, and they can, you know, purchase and things, part of your business. So if you're asking about potential shareholders, you may want to look into whether you qualify to become a public limited company, if you wanted to, and whether you wanted to go down that route. But I'm assuming from this, you know, us smaller business owners normally, you're probably going to want to find more private shareholders. And in that case, you might want to go to friends, family, and things like that. So yeah, always an option. Right, Lee on Instagram DM. I'm debating taking out a small business loan, but I also want to buy a house soon. Will the loan stop me getting a mortgage? So, first question to you is, are you a sole trader or a limited company? If you're a limited company, getting a loan for that limited company is not going to stop you getting a mortgage at all. The mortgage is going to be based on you personally. So how much are you on a wage from the company? That's one of the most important things I would say, is to make sure that you've got a comfortable wage to be able to show, you know, the lenders. And then, yeah, your dividends will obviously be coming in. That's something else to show that's your income to the mortgage provider. But to be honest, if the loan is on the company, you shouldn't have a problem. Just be careful with moving company structures around this, because obviously you don't want to be swapping too much. Sometimes they need kind of three years worth of kind of accounts and evidence, basically. So yeah, watch out for that one. But no, it shouldn't affect you as long as you're keeping them separate and you're focusing just on yourself and what you're receiving. That should be fine. Right, Casey on Twitter DM. I need to write a business plan and have no idea where to start. Can you help? Any top tips? Okay, so I have actually got top tips on my website. So if you want to go and have a look, go for it. But basically, I'm not an expert at writing a business plan, but it's really important to write down everything. So from your goals down to, you know, what you're expecting, how you're expecting the business to go, how you're expecting to be able to market your business, all things like that. So yeah, that's really, really important to basically go through every single step. Have a look at my top tips, see if they help. If not, feel free to reach out. We can have a little chat about it. But yeah, I'm by no means an expert with business plans, but yeah, I'm sure it can help, and we can kind of go through things. Kai on Facebook Messenger. There's so many things we could be tracking. I don't know which one is the most important for my business. Can you give me a clear-cut answer? What's most important? Are you ready for this? Cash flow, net income, gross profit, retained earnings, equity, or one that I've not mentioned. Oh, this is brilliant, Kai. I love how you just want a clear-cut answer. So, clear-cut answer. No, I'm joking. Could be any of them. No, so it honestly depends on your business. So what is most important to you? Do you struggle with cash flow? Are you getting to the end of the month thinking, oh my goodness, you know, or if cash flow isn't a problem for you, then it might be one of the others. Also, it depends how well you're doing in all of these sections. I would say to basically keep track of all of them, have a clear understanding of all of them, and see where your weak spots are. If your gross profit margins are awful, you need to basically up that. Have a look at your industry. Have a look at, you know, how people in your industry are doing, things like that. Cash flow, if you're struggling, yeah, you need to keep an eye on things like that. We can always help with cash flow forecasts, things like that. We can, you know, basically trial things like that, see if it helps the business. If it doesn't, then we can go on to something else. But I would always say cash flow is a really good way to start, particularly if you don't have the constant kind of data for your business, because it's really important and it's very underrated as well. The last thing you want to be doing is kind of racking up kind of credit card bills or loans or things like that. So cash flow is really, really important. But the other one that I would say is really, really important is your gross profit. We're all in business to make money at the end of the day. So you need to make sure they're high. Right, let's go on. Poll results. We asked you, are you self-employed, in a partnership or a limited company? So 30% of you said you're sole traders. Nobody is in a partnership. Wow. And 70% of you said you're a limited company. It's very interesting. 70% limited company, 30% sole traders. That's good though that the limited company people are here. That's really important. So thank you for tuning in this morning. If you want to get in contact with me, feel free to DM me on Instagram. It's @IWillBookkeep. and find out more information about my business at www.ilebook-keep.co.uk. So coming up on Ask the Expert tomorrow is Katie Howell, CEO of Immediate Future, the original social media agency. Tune in to learn how you can supercharge your social media to grow your business or personal brand. A reminder that if you need any more advice, join the official Interix QuickBooks SMB community group on Facebook. Accountants and business experts are on hand 24/7. I've really enjoyed answering all your questions this morning. Have a great day.